Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin on the 4-hour time frame, starting with the highest probability Elliott Wave scenario, which is the one I have here on my chart, which is an impulse to the upside, a 5-wave structure. Now the impulse starts with a multi-1-2, a bit of an overlapping grind here to the upside, followed then by wave 3, which commonly is your longest and strongest wave. After wave 3, we're then going to be looking for a couple of 4 5s, which also create an overlapping grinding structure to the upside. And after wave 5, we then look for a retracement. This creates a very typical 5-wave impulsive move to the upside, which you see over and over and over again. A great example was the move to the upside from 49k to 110. Here we have the overlapping grinding structure. These are your multi-1-2s here, followed then by wave 3. And then you end with the wave 4s and 5s, which again is an overlapping grinding structure to the upside, creating a couple of highs. And after the final 5, you then get your retracement to the downside. So this is something that we're going to be looking for locally once the larger wave 4s and 5s eventually start, because of course that's the question. Wave 3 can extend very far, and you quite simply have to wait till you get a larger sideways range, and that is the moment you're going to start labeling higher degrees wave 4s, and you're going to wait for those wave 5s to the upside. Now, currently I count the chart the way it is on my chart here because of the highest amount of volume in this push to the upside the end of last week. Preferably, the highest amount of volume is in your subwave, wave 3 of the larger wave 3. So that is the reason why preferably I count this move to the upside as a wave 3. And currently we are then working on the final leg inside this 3 and then 4, 5, 4, 5. So still looking for higher prices. And it's quite simply, again, the question, when do you get a bigger range here to label this as a wave 4? We just got to be patient. Now, with regards to invalidations, the invalidation for your wave 4 here is the 0.618 that I take from the low of this wave 2, which is the highest degree wave 2, to the current high here on the chart. I don't like to see this wave 4 touch the 0.618. Now you might be thinking, why are you taking it from this low and not this low over here? Because of course this wave 4 is matching this wave 2, right? We have the lowest degree Elliott wave count, 1, 2, 3, 4, look for a wave 5. After that, we have a wave 3 finished, which is 1, 2, 3, look for 4, look for 5. So therefore, this wave 4 is matching this wave 2. So in theory, you would pull a fib from the low of this wave 2 to wherever the high of 3 is going to be, and then toggle on the target area for your wave 4, which commonly is the 236 to the 05 Fibonacci, with the invalidation then being the 0.618, which is incredibly rare for a wave 4 to touch a 618 and still be regarded as a 618. That is a general thing in the market. Many people consider it this way, even Robert Prechter himself, when I discussed this over dinner earlier this year in March. So it's just not something we like to see. Now you can see, however, the 618 is a little bit higher at 114.9K. So you might think, okay, I'm going to consider this 0.618, which would not be wrong, right? Absolutely not. Actually, it's right. If you're looking for this wave 4, you like to pull the 618 from the end of this wave 2. I personally just like to be a little bit more safe. And if this is the highest degree wave 2, I always like to have the highest degree 618 on my chart, because I am sure that if this 618 is going to be touched, then all the lower degree 618s are also touched. And then at least I'm not looking surely for an impulse anymore, right? So therefore, I prefer to have the highest degree 618 on my chart, which is currently sitting at 112K. Now, another thing that we don't generally really like to see once we start looking for wave 4s and wave 5s is a wave 4 of a higher degree moving far below the wave 4 of a lower degree. So you can see here on my chart that the lowest degree count is this count here, 1, 2, 3, 4, look for wave 5. This wave 4 is a lower degree wave 4 compared to this one, right? Because inside this impulse, 1, 2, 3, 4, 5, we have the lower degree 1, 2, 3, 4, 5. So this is your lower degree 4 compared to this wave 4, meaning preferably this wave 4 is not going to retrace below this range 4. Now, according to the theory, it says that wave 4 of a higher degree tends to end at the termination point of a wave 4 of a lower degree, which then would be somewhere over here. And it's no problem to wick below here or maybe shortly take out the lows. You just don't want actually price to move all the way down here. So even though the 618 is at 112, which is like a safe invalidation, we preferably do not like to see a market structure change. And if you do take out the lows, let it be a wick. But we actually don't want to move into this quick structure to the upside. We don't want to get here, right? Even though price didn't touch the 618, we still don't like to see price move here as slowly we start to invalidate an impulse to the upside. Now, mind you that what I have here on my chart can, of course, still change. If price is going to move towards the upside and volume is going to increase instead of decrease, which is common in 4/5s, you slowly see volume decrease. Let me again use the previous move as an example here, right? So you can see over here, price moves up. We have volume increasing in the move up. Then price is slowing down and you can see price eventually volume is moving to the downside accordingly. That is exactly what you like to see in an impulsive structure. At least that is by far most common, right? So that is what we keep an eye out for. But if price is going to, or volume is going to increase as price is moving towards the upside, we may have to consider another count where we could be in a more bullish structure where we add another 1-2 towards the upside over here. And then this is only going to be your wave 3 and you get more 4/5s later, right? It's at the moment not preferred based on the current information. This is the highest volume, so preferably that is your wave 3. And also we do like to see wave 1-2s most commonly overlap with one another when you create a multi-1-2. And here you can see that the 1-2s are nicely overlapping with one another. So preferably those are your 1-2s. It does happen that a multi-1-2 does not overlap. It is not as common, but it is something you sometimes see. So again, another example here, the low at about 38.5K to the high at 73, right? Here we have first move up. That's your first 1-2. This is your second 1-2. Clearly, there's no overlap between these ranges. Then you get your wave 3 to the upside on a high amount of volume, right? Then you get your 4, 5, 4, and then your wave 5 to the upside. So you have a multi-1-2 to begin with, followed then by wave 3, very steep acceleration, 4, 5, 4, 5. And the moment you take out this high over here, because that is your wave 3, this is your last wave 4 of a higher degree, you're looking for a final move to the upside. That's your final wave 5. So the moment you take out this high of wave 3, it is very smart to start scaling out of positions because you realize from an Elliott Wave point of view, we are likely going to end an impulse relatively soon. And then it's a good idea to start checking out the range that forms and see if you can enter new positions inside that particular range, right? So we just got to wait for price to eventually give us a range. And those ranges can then be labeled the wave 4s. Now, it is common for wave 4s to be quite equal in size compared to wave 2s, right? So preferably this wave 4 is going to be quite similar in size compared to this wave 2. So that is, again, something we like to see, something to look out for. As long as price is creating very short ranges, as price is moving up, we preferably keep looking for continuation. So in the end, we just got to wait for a bigger range to form, right? A bigger move to the downside, bigger range to form, right? That's going to be our wave 4 that we then look for. And then we look for 4s and 5s to end an impulse. Now, in a bearish scenario, we have to label this somewhat as a 3-wave structure, not looking for a flat anymore in a wave A, B, and a wave C, because wave B touched the 1.618 taken from the start to the end of the previous range. And the 1.618 is incredibly rare for Bs of a flat. We don't like to see this, so therefore very low probabilities. And therefore you need another bearish scenario. Now, an Elliott Wave analyst always needs a bullish and bearish scenario. And if we do not look at the flat, right, because we don't like it due to the 1.618 touch, we have to consider a move to the upside, again, in a 3-wave structure, but then it turns into diagonals, right? So then we have a bigger diagonal that we would be looking for, and then a wave A, B, and then a wave C towards the upside. But even here, if we would consider a bigger diagonal, we would still be looking for another all-time high to come, right? So either a diagonal here, 1, 2, 3, 4, still look for 5 before taking out the low. And if you want to be very high time frame, like I have seen this. I don't know if it was accidentally on Twitter or something, because I rarely ever follow crypto related stuff. I don't really like to look at other accounts because it's generally a distraction, except for for the Discord, my own Discord, because I love engaging there. But I don't think I've really seen this in my Discord. But then a bigger 1, 2, 3, 4, 5 wave diagonal structure like this, but an ending diagonal has to be a 3-wave structure. I don't know how someone likes to count this move to the upside here as a high probability 3-wave structure. So therefore, that diagonal does not make sense to me. And I think I therefore answer a question of someone in Discord that saw a count like that's where I saw it. Now I remember someone shared a count that he saw on Twitter from a Japan Elliott Wave Institute thing that counted that diagonal, which to me makes absolute 0 sense. So that is the answer. So if looking for a diagonal, maybe something like this, where of course this move towards the upside, yeah, we can count a WXY in here, right? We can count an impulse in here. So wait and see. But even if it turns into a 3-waver here, would still look for a retracement and another high. It just doesn't have the highest probabilities compared to just looking for a traditional impulse first. Only if this one over here becomes invalid, that is the moment we start looking for other structures. I just want to share my thoughts on the alternative. Now then we also have some news this week on Tuesday, Wednesday, Thursday, and Friday. You can see the times here, that's Central European time zone. So just make sure you trade safe, because it can be quite a volatile week, and it starts nice, actually, right? Continuation of the previous week. With regards to my horizontal levels, these are the support and resistances that I have here on my chart. Of course, all below price, because to the upside, we don't have any horizontals. We are in my aware area, which is based on fibs, right? So there's a couple of fib confluences in this particular area, which is the reason I labeled it as aware. So I will continue to keep an eye on this. The aware area, however, is an area from a weekly time frame, right? So it's a weekly time frame area. And just to show you maybe how I got it with fibs that I call the KRZ, which is a cheesy name, a Kuhn's reversal zone. It's something I discovered myself years ago. And I've shown it a couple of times. If you're a regular viewer, you probably know about this by now. But yeah, nicely respected over here. Just observe each of these pockets as a support and resistance area on a weekly time frame. Right, and you can see the respect here of the pool. And we are now approaching this area here at 123.3, 125.8. Right, now, mind you, of course, we can easily, of course, wick above as well and then reject. So price action above 125, but then the weekly candle still closes around the pocket. Right, that is something we can, of course, see. And another pool that I have here, because you can see that the upper half of the aware box is filled, but the lower half is not. So if I then show my other one, which is a logarithmic pool, which goes further back in time, as you can see, all the way from down here, right? Very, very nicely respected as price moved towards the upside. Then currently we are inside that pocket. So the aware pocket is based on these two pools, right? And these two fibs, this one over here now on my chart and the other one of the previous pool, they basically fill up this box. And also here, right, occasionally it can happen. Price moves up, it wicks above and then rejects, right? Of course, sometimes we just push through. If that happens, very nice for our portfolios. We just look at the next one up here, which is not on my chart with this specific pool. But at least now you know where the aware area comes from, which is just an area I keep in mind. But for me, Elliott Waves is the main thing. So of course, I preferably just wait for ranges to form, give me the 4 5s. And once the 4 5s come, then you know we know where we are in the impulsive story and how to manage positions accordingly. Then we get to the probability. So highest probability is the 5-wave bullish impulse to the upside at the moment, just waiting for 4 5s to form at some point, right? Might be soon, might not be soon. You just got to wait for wave 4s and 5s. But the count that I have on my chart that I follow at the moment is this one because of the volume, highest volume in this move. Preferably that's the wave 3. And then we're looking for a wave 5 to finish this 3, then a wave 4, wave 5, wave 4, wave 5. If price accelerates and volume increases, we're going to shuffle things around a little bit, right? in general, we're just waiting at some point for another range to form again, right? And that is also my personal approach when I like to look for new positions. Is constantly waiting for ranges to form, and when the range has a higher probability of being corrective, aim to join the trend on areas of support, which I then identify in that particular range. So as long as price is creating a range, and of course a wave 4 should be a corrective range, right? Zigzags, WXYs, flat structures, but it should be a 3-wave structure. The moment probabilities are indeed higher, this is a corrective ranging structure, I will be looking to join the trend, trade towards the upside on my pockets of support. So then the retracements on, for example, target boxes are going to be interesting to me. But I need to wait for another range to form, because at the moment here, at least on the 4-hour, because I prefer a bit of a higher time frame, 1 hour, 4 hour, there's nothing going on. We just have a push to the upside. So it requires, again, a little bit of patience. But this range was very nice, and we are enjoying the move towards the upside. So that being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. I really recommend that video. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.